If you have been keeping up with the recent headlines, you might know that experts are warning that we're close to an economic catastrophe, especially with the meltdown of banks like Silicon Valley. Yes, that bank had been the backbone of the tech industry for years and now is in trouble, and it's sending shockwaves through the entire economy. Now, what exactly is before us, and how near are we to it? Let's see. I know all of this might sound dramatic to you, but let me explain why. First of all, let's talk about what happened in Silicon Valley. One of the major banks in the area recently failed, and it wasn't just any bank. This was a bank that was heavily invested in the technology sector. It was a bank that was supposed to be on the cutting edge of the industry, and yet it failed. First, let's set the scene. The Silicon Valley Bank was the darling of the tech world, a financial institution that specialized in lending money to tech startups. It was founded in 1983, just as the tech boom was starting to take off, and for decades it enjoyed a steady stream of business from some of the most innovative and successful companies in the world. But then something went wrong. The bank's profits started to shrink, its stock price plummeted, and eventually it had to file for bankruptcy. The question is, why did this happen? What were the reasons behind the bank's failure? Well, my friends, the answer is not simple. One of the main reasons was the bank's over-reliance on the tech industry. As we all know, the tech industry is notoriously volatile, with rapid swings in both directions. When the industry was going well, the Silicon Valley Bank was doing well, but when the industry hit a rough patch, the bank was hit hard. This happened in the early 2000s during the dot-com bust and again during the Great Recession of 2008. The bank simply couldn't weather the storms. Another issue was the bank's lending practices. The Silicon Valley Bank was known for being aggressive in its lending, often giving loans to startups with little collateral and high risk. This worked well when the startups were successful, but when they failed, as many inevitably did, the bank was left holding the bag. But perhaps the biggest reason for the bank's failure was something that is all too common in the financial world: greed. The bank's executives were focused on making as much money as possible, often at the expense of sound business practices. They engaged in risky investments, paid out massive bonuses to themselves, and ignored warning signs that the bank was in trouble. In the end, their greed brought the bank down. But it's not just this one bank. There are other signs that things are not going well in the economy. The stock market has been incredibly volatile lately, with huge swings up and down. The housing market too has been shaky, with prices fluctuating wildly. And then there's the unemployment rate, which is still higher than it should be, even though the economy has been supposedly recovering for years. So what does all of this mean? It means that we are living in uncertain times, my friends. Times when the economy is not stable and when we can't predict what will happen next. We are on the edge of a cliff, and one false move could send us over the edge. I'm not trying to be on a downer here, but I think it's important that we all understand the seriousness of the situation. We need to be aware of the signs that indicate we're heading towards an economic catastrophe, and we need to be prepared for the worst. So, what are some of these signs? Well, one of the most obvious is the level of debt that we are carrying as a nation. We are in debt up to our eyeballs, and I'm feeling pretty anxious about the state of our economy. I mean, have you ever stopped to think about just how much money we owe as a nation? Let me explain. When our government takes on debt, they have to pay interest on that debt. And where do they get that money? From us, the taxpayers. That means less money for things like education, healthcare, and infrastructure. It also means our government has less flexibility to respond to crises, especially like what we faced with COVID. But it's not just about the immediate impact on our government's budget. It's also about the long-term consequences. The more debt we accumulate, the more we have to pay interest payments. And that means less money for future generations to invest in their own future. Think about it this way. Imagine you're carrying a credit card balance that you can't seem to pay off. Every month, you're just making the minimum payment, but the balance never seems to go down. Eventually, you're going to reach a point where you're paying more in interest than you're paying off the actual debt. And that's exactly what's happening to our nation right now. We are carrying trillions of dollars in debt, and the interest payments on that debt are growing every year. In fact, the Congressional Budget Office estimates that by 2050, we'll be spending more on interest payments than we will be on national defense. That is a scary thought, isn't it? It means that we'll have less money to invest in things that are critical to our national security and our future prosperity. and it means that we'll be passing on a massive burden to future generations. Now, some people might argue that debt is necessary for growth. After all, we've taken on debt in the past and we've managed to come out on top. But here's the thing, the amount of debt we're carrying now is unprecedented. We've never seen anything like it before, and it means that the risks are higher than ever before. If we continue down this path, we could be setting ourselves up for major economic catastrophe. We could see inflation skyrocket, interest rates spike, and the value of our currency plummet. And that's not even considering the impact that a major recession or depression could have on our nation. This is not sustainable, and it's a ticking time bomb. Another sign is the level of income inequality that we are seeing. The rich are getting richer while the poor are getting poorer. And it's not only morally wrong, but it's also bad for the economy as a whole. When only a small portion of the population has money to spend, the economy suffers. And then there's the fact that we're living in a global economy. What happens in other countries can have a huge impact on us. Look at what happened in Greece a few years ago. That crisis had ripple effects throughout the world. We need to be aware of what's happening globally and know how it impacts us. So my friends, what can we all do about this? Well, for one thing, we need to be aware of the signs and take them seriously. We can't just bury our heads in the sand and hope for the best. We need to be proactive and start preparing for the worst. The first step is to recognize the seriousness of the problem. We need to start having honest conversations about our national debt and the risks that it poses. We also need to start taking action to address the problem. That could mean a variety of things. It could mean cutting spending, raising taxes, or finding new sources of revenue. It could mean reforming our entitlement programs or making changes to the way our government operates. There is no one-size-fits-all solution, but what's clear is that we can't afford to ignore this problem any longer. And as a citizen, this might mean taking steps to protect our investments, such as diversifying our portfolios and investing in assets that are not tied to the stock market. It might mean paying off debt and living below our means so that we are not vulnerable if the economy takes a turn for the worse. We also need to hold our leaders accountable. We need to demand that they take action to address income inequality, reduce our national debt, and create policies that protect us from economic catastrophe. Anyways, in the end, the recent banking failure of Silicon Valley is just one sign that we're living in uncertain economic times. We need to be aware of the signs and take them seriously, but we also need to be proactive and take steps to protect ourselves and our families. We can't control what happens in the economy, but we can control what we have in our hands. I know this all sounds pretty dire, but I'm not trying to scare you. I'm just trying to be honest about the challenges we're facing as a nation. We've got a lot of work to do if we want to secure a prosperous future for ourselves and future generations. So what do you guys think? Do drop your ideas in the comments section below. We'll meet again in another episode, and until then, goodbye.